Business funding, where to go? The rate of interest on personal loans can be fixed or variable. In the case of a fixed-rate personal loan, the rate of interest remains the same throughout the loan period and consequently, the amount of monthly payments also remains the same. The loan market in the US is swamped with an enormous number of loan options. Different loans have been designed keeping in mind the diverse needs and expectations of US residents. The payday loan is credited directly into the bank account of the borrower. They may not have been able to maintain the desired gap between application and approval because of the uncertain nature of the expense for which the loan is needed. In spite of this, the borrower is given an instant loan, while the service charges are upped. You can use a personal loan for any of your miscellaneous needs. You can even use a personal loan to make daily purchases. However, you must avoid using personal loans to pay for daily expenses. Business funding. Every business needs money at one time or another. The process of obtaining financing can be daunting and the chances of success limited if it is approached in a disorganized or haphazard way. Lenders are conservative critters. However, it is important to understand that it is their job to lend money, and they are happy to do so if their risk is reasonable. The chances of obtaining a business loan are greatly enhanced if you adhere to the following procedure. Know what you need. Understand how you intend to use business financing, how much funding you need, and how you intend to repay the loan. Be able to communicate this clearly and confidently with prospective lenders. Understand your current situation. If you are an existing business, are you profitable, and does your balance sheet have positive equity? What does your credit look like? Have a clear understanding of any existing liens and lien priority. Know your credit score and answers to derogatory credit issues, liens, judgments, slow pays, collection actions, before presenting your application. If there have been credit, profitability, or equity issues in the past, present a credible argument as to why these issues have been resolved or how this loan will change this situation. Know your options. All lending is critiqued from a risk standpoint. Certain levels of risk will qualify for certain types of financing. The level of risk is reflected in the cost of the financing. The more secure a lender's money is, the less it costs you. Get creative. Financing takes many forms and is available from a wide range of sources. Standard, conventional bank financing usually offers the best interest rates, however, it is the most difficult to qualify for. These loans appear as a long-term liability on the business balance sheet. Conventional loans are available through banks and other lending institutions and can be guaranteed in whole or part by the SBA. Revolving lines of credit are another form of business financing. This type of loan is secured by accounts receivable or inventory and is available from a bank or an asset-based lender. Credit cards are a form of a revolving line of credit. An asset-based line of credit, ABL, is considered alternative financing and is available to borrowers who are too highly leveraged for a bank. Unsecured loans, on the other hand, require no collateral but almost always have a higher interest rate than secured loans. Some of these, like the credit check, are necessary for determining the reliability of the borrower. Personal loans are loans taken by people for personal reasons. This might sound like a vague definition of personal loans. Consolidation loans have loan terms ranging from 10 to 30 years. A good consolidation loan would be that which fits beautifully in your financial situation. Consolidation loans are advantageous to almost anyone because of the ease with which you can customize them to your financial stability and your choice. The secured loan helps borrowers in making the best use of the equity stored in his or her property that helps them in borrowing a larger amount of loan, and that too for a longer loan term. Real property, equipment leases, and notes are another form of business financing. In these contracts, the collateral for the loan is the property or equipment itself. When there is no outstanding balance owed on the asset, the property or equipment could be used in a sale-leaseback transaction. Here, the asset is sold to the lender for cash, and the borrower leases the property from the lender until the loan is paid. Landlords can be a source of financing. It is not uncommon for a landlord to contribute dollars or rent concessions to the development of a tenant's space. For this loan, the landlord may require a percentage of gross sales clause in the lease as repayment. Extended vendor terms for the purchase of products may provide short-term operating capital loans. In the event that additional credit strength is required, loan guarantors or borrowing someone's credit may help the borrower qualify for less expensive financing. Be flexible. Your final package may be comprised of several lending solutions. Present a clear and understandable proposal. Lenders need to know who you are personally, professionally, and financially. The lender needs to evaluate income tax returns, corporate and personal financial statements, income statement and balance sheet, and a cash flow projection. The balance sheet has to look a specific way. The current ratio should be at least 1:1, and the debt-to-equity ratio should be at least 4:1. Be specific as to how the money is going to be used and how it will be paid back. Lenders want to know what is securing their debt. Lenders evaluate the quality of the collateral and want to ensure that it is adequate to secure the debt in case of default. A secondary source of repayment is required prior to granting standard financing. The personal guarantee of the borrower is often required. In some situations, a lender may seek secondary collateral. Secondary collateral is simply some other asset in which you have equity or ownership, i.e., equipment, property, inventory, notes. Business funding is not difficult if the borrower is creative and realistic. Know how much money you need and how you are going to use it. Be prepared to defend your needs and anticipate the lender's questions. In the event that a lender cannot grant your request, perhaps it is the way a loan is packaged. Find a lender who is willing to make recommendations that will help you find financing. A good lender will tell you quickly if they can help you or not. If an intelligent and organized package is presented, a timely response is warranted. The loan can be repaid over any term between 5 and 25 years, depending on your available income and the amount of equity in the property that is to provide the security for the loan. Debt is a hard thing to live with. Reduce debts today. Online processing of loans is of special help in making instant loans possible. Online processing of loans does not simply mean using a computer for sorting and arranging data. Repayment options have to be studied carefully and understood before you apply for secured personal loans. Most people repay their secured personal loans before time, and usually, early repayments carry repayment penalties. The rate of interest vary appropriately depends on the loan amount, repayment term, and personal condition. There are lenders in the US who can arrange loans for you, and that too at a lower rate of interest. Watch the next video on your screen.